Hello and welcome to our end of year podcast. I'm Samantha, the marketing director.
Rebecca, associate director.
And Tom, commercial sales manager.
And we thought we'd have a chat about everything that's changed over the last 10, 20 years in terms of us as a company and the property market as well. I think the biggest change, I would say, for anyone that's followed us for all this time is that we used to sell overseas property. For anyone that didn't know that, the market wasn't that great in the UK. We sold investments in Turkey, Thailand, the USA, Brazil, everywhere you could think of where there was a decent property market and where people could make a good investment. However, that changed in, I would say, 2012, 2013, and I think that's when the market in the UK started rebounding. People were more secure, wanted to start building again, and that's when we changed our presence. We started working with some of the first developers in the UK who were building off-plan property again. So I think that's when you started with us, Rebecca, wasn't it?
Yeah, 2013. That's when the residential market we saw really started to bounce back and people felt confident in the market again and they saw it as a stable investment. And Manchester really was one of the first cities to bounce back. And
Absolutely.
Yeah, and people saw it as one of the main hotspots within the UK.
The main hotspot.
The main hotspot, yeah, definitely. People talk about it as a second city. Everybody said Birmingham, but really, let's face it, it's Manchester, right? So yeah, I think not only have rents increased, we've seen, even if you look back over the last 10 years, from 2014 when we first started selling these properties and they've been coming on the market, the average rent in Manchester were around £650, £700 a month.
Yep.
I mean, you and I both started our careers in lettings, so remember it well.
The trenches of lettings.
Yeah, definitely. And even over the past 10 years, they've gone up, they've doubled. I think the average rent in 2024 now is over £1,200 a month. So,
Such difference. I don't think you realise how much it's changed until you actually look at the figures and look back.
Definitely.
I think not just the figures though, the actual skyline of Manchester.
Yeah.
Well, if you look back 10 years, there was no real high rises, and then you look at the
Beetham Tower was the only one.
Beetham Tower was the tallest, and now that it's dwarfed, isn't it, by the cluster of skyscrapers of the cordon down the bottom end of the sky.
Definitely. Then we did a mixture though. We had obviously all the residential offerings that there was this all of a sudden this surge of interest in.
Yeah.
People wanted to jump on the Manchester sort of bandwagon. And then also we were still doing a lot of our purpose-built student accommodation at the time.
Which has really changed.
That's massively changed. But still just as lucrative, still just as stable in terms of an income. I think, Samantha, do you remember when we were selling sort of the really small student pods? I think Liverpool was one of the first.
Yeah, I think they were more close to anyone that's my age and older. What I had when I was at university, which was basically a room.
A box.
A bit of box with, I think it was smaller than a single bed and a sink and a wardrobe and a desk. And that's all you got. And it was communal facilities. I mean, I remember sharing with 14 people to a kitchen and showers. And to be fair, that's what the first pods were that we were selling, because essentially universities don't have enough of their own accommodation to give out. So that's where the private sector started moving in. But things have massively changed now.
It's evolved so much, hasn't it?
So much, so different.
The price of the pods, though, I think it was quite a nice entry level. It was just dipping the toe back in.
It was, because people needed confidence as well, didn't they?
Yeah.
Because the market hadn't been great, and I think they wanted the confidence to go in, like you said, dip the toe in and invest at a smaller amount, and then grow from there.
Because you can't really go wrong if it's in good proximity to a university.
Yeah.
And in a city centre location.
Yeah.
I mean, we were selling stuff that was sub 50 grand per unit. I mean, that's literally unheard of.
But you can't build for that now.
No, you definitely can't. But even that's evolved. Like now, I think obviously after COVID, the developers had to adapt and change what they were selling and building really. And all of a sudden, we saw this influx of more luxury, self-contained apartments, which were just the pods that you were used to. They had their own sort of luxury kitchen, gym, cinema rooms.
But I think the popularity of UK education to overseas students.
I think that's been the major change, hasn't it? It's been the influx of
overseas that's what said sort of.
They set the bar in terms of what they expect.
Yeah.
The standard.
Yeah.
Because
that's influenced it.
I was going to say, when we worked in lettings, a lot of the international students, they they rented 1 and 2 bedroom apartments in the city centre, and now they can get their own self-contained
Definitely.
student unit, which is much much closer to the university. They'd rather rent something like that and pay a little bit more.
And it's very different to, you know, homegrown students who will maybe only stay there in term time. You know, these students are living here,
Yeah.
it's their home.
Yeah.
So it needs to be, you know,
Safe,
yeah.
secure, things like that.
I think they
It's a
pay
nice
for convenience,
place.
don't they? Yeah, they pay for convenience, so it works well.
So that, I feel like that market we saw really take off, and as I said, we've talked about people dipping the toe in, and that built more confidence. And then obviously we talk about the residential, so you 1, 2, 3 bedroom properties, which all of a sudden you've got rents increasing,
Yeah.
more's being built, whether it's off plan or people looking at sort of the secondary market again and seeing what deals are out there, things like that. I mean, even just look at the population of Manchester alone. I think, what did we say, tourism by, is it 10,000?
10,000 a year for the last 5 years, I think.
Yeah, 10,000 a year for the last 5 years.
Which is crazy when you think about
Yeah,
it.
yeah, it really is. And that's quite central Manchester as well,
Yeah,
isn't
and I
it?
think a lot of people, if you look back historically, I know especially when we first started selling the residential apartments, I don't think people thought it was sustainable,
No.
that there could be this many apartments in
Yeah.
the city centre.
I think they had some confidence because they were investing off plan, so they obviously trusted the market was going to go somewhere positive, but I think it was still a bit uncertain as to
Yeah, you
who's
always
going to
get,
rent them and,
Yeah.
and what the rents would be.
and you're always going to get that rebuttal of, is there enough people to rent them? Are they going to be sat empty?
Yeah.
But slowly but surely, you
The
see,
model's proven now,
the
isn't it?
model's totally proven.
And I think, however you may view it, whether it's come to fruition or not, that was a catalyst for a lot of growth up in Manchester especially, but the north as a whole, because a lot of projects did get underway, and I think it made people realise that the obvious market of London is not necessarily where you're going to get the most growth.
It's not the only market. People
Yeah.
used to think it was the only property market in the UK.
Exactly. And I think that has had a big influence into people seeing that, you know, don't go for just what the obvious
Yeah.
trophy investment is. Really look into the actual investment and what that's going to get you, and what, from a growth point of view,
Yeah.
where that's going to take you.
Yeah.
Yeah, you think about even the capital growth that we've seen in Manchester. I mean, you and I we've all been selling property for that's
A long time.
all I know, really. But in Manchester, it's central Manchester, and say the growth that we've seen is over the past 5 years, it's nearly 35%.
Yeah.
Nearly 35%, and the national average has been 15%.
Yeah, I think a lot of it's driven by obviously the rental market's driven a lot of it. The rents of, yes, £1,200 a month is a high average, but the average rent in London's almost 2,500. So a lot of people are still relocating because, you know, a lot of the bigger companies have office presence here now as well. You've got obviously all the big financial firms, KPMG, Barclays have got a huge office here, Deloitte, they're near Victoria Station now, aren't they? So a lot of people are still, coming up here for a better quality of life because they've got more spare cash.
The media influencers as well.
Correct, yeah.
Like
The BBC is still there.
Yeah, well, where we are, Media City, I mean, the growth when, you know, I first moved here in 2012, and I think there was a Pizza Express and a bar, and that was it.
Lime bar.
Lime bar. And if you look at Media City now, and the amount of businesses, the amount that, you know, the move of Coronation Street, ITV,
Yeah.
the BBC, the sheer volume of bars, restaurants, it's more of a residential place to be now, but with that influx of business, because they've realised that a lot of these bigger corporations, they want a northern presence.
Yeah, of course.
And that has then led, you know, subsequently to more people moving up here, more people moving here to live and work.
Yeah.
And that's where the investment comes in, really.
It's more attractive for like the younger renters as well.
Yeah.
Like my niece, she's 21, recently graduated. She wanted to rent in Media City. That's where she wanted to be, around the Salford Quays area. So I think it's so much more attractive now, and we're finding people are renting for longer, aren't they?
Yeah.
You know,
We get families in the city centre.
Yeah,
never used to get families that lived in Manchester city centre.
renting.
Renting, yeah, and I think because obviously the amenities are better in the developments, the whole setup of how these developments work is a lot different to what it used to be. You've got obviously swimming pools, gyms, concierge thing was always sort of there, but there's just more.
It's not just a man desk now.
Yeah, it's just,
They'll take your parcels.
to take your parcels.
Yeah, they'll do everything.
It's a lot different. So yeah, I think the demographic of who rents in Manchester's changed as well.
And people rent for longer, don't they? And there's not the stigma anymore around renting.
Yeah.
You know, a little bit, maybe we're going a little bit more European in that sense.
Yeah, I think we were one of the only countries really where there was always such a focus on owning your own home.
Yeah.
And that was seen as a status of wealth or a security, should we say. But I think how things have changed, especially over the last 10 years maybe, I think you can definitely see that there isn't that stigma about renting.
People want more flexibility, I think, don't they? And you get that with renting as opposed to one bit more flexibility renting as opposed to owning.
I think, like, I've read something the other day that said in the early 80s, over 50% of, let's say, early 30s were bought their property, they bought it, whereas versus now, I think it's less than 30% buy. It has a big difference in that period of time. And there's
a lot of factors. Isn't
there's
there?
massive. I was going to say a lot of that's economics, and people they can't get on the property like that. But also there is that demand for rental in terms of they like the flexibility. They can move every year. It doesn't tie them to one place.
Because I think people are moving jobs a lot more now as well, which I think has an influence and an impact on that. Whereas you might find that people stayed in the same job for 10, 20, 30 years. That's not the case anymore, and people are wanting that flexibility to be able to move.
Yeah.
But I think it'd be ignorant, wouldn't it, not to touch on the other economic influences that have pushed rents up.
Obviously the mortgage rates are nowhere near what they were in the 80s, but you know, when you look at the property values now, mortgage payments are a lot higher. The deposit levels that you need to buy a property now are probably 10, 20 times what they were back in the 80s. So, and you could get 100% mortgages back then, which obviously you can't do now.
No.
So I think the mortgage market's got a big influence on that as well.
Yeah. So that millennial generation, they're going to be renting for long.
Forever.
Forever.
But some don't mind that.
No,
Places like Germany, more people. I've got clients that have bought from me, and they live in Germany. They're in their mid 60s, late 60s, and they've rented all their life. They're not interested in owning anything. They'd rather put their money into investments as opposed to their own primary residence.
And that's why our buy-to-let landlords are capitalising on that, really, the sort of the rental increase. So it's only when you look back over the last 10 years and we talk about that rental difference that you really see, wow, this is a stable asset class.
And I think we've noticed that. I think one of the things, again, we're prudent to touch on is, I think especially, again, even the last 5 years, should we say, 5-6 years, a lot of the changes that have happened from a governmental point of view within the UK, and we get asked a lot about, or people query, well, is this going to have an impact? Is this policy going to have an impact? Is this anything that's happening globally? I mean, we had Brexit, COVID, a lot of
change of government,
lots of government changes within the UK, and we do get people that are hesitant and want to see what, if anything, is going to happen. Is something going to happen to the property market? And I mean, I suppose you two will know a sort of first-hand experience of talking to buyers, and then the reality of it is that actually, in real terms, the property market hasn't.
People who've waited have missed out on the growth.
Massively. Inflation's done a number on your savings in your bank account. So if you sat on it, if you were one of the people that sat on it in 2014, 2015, even a few years ago, we're going to wait. We think something's going to happen in the market, X, Y, and Z.
Your money's worth a lot less in the bank than it was 5
Correct.
years ago.
Exactly. You might as well have been earning 6, 7, 8, 9%.
Even 10s now.
Even 10s that we're seeing. Yeah, even 10s that we're seeing. You might as well earn that, because, as I said, it's doing absolutely nothing in the bank.
Yeah, and opposed to what the stock market's been so volatile, and with that you mentioned, COVID, Brexit, the stock market was a roller coaster, whereas properties. It might have stayed level or even dipped a little bit slightly, but longer term trend, it's always.
Bitcoin, that obviously started off I think people that invested early, it was very lucrative. That's obviously.
And it was a little bit of a pun, wasn't it, early as well?
Yeah, it was. I think that's even out now, and I think we've obviously seen that isn't as. I suppose the the returns on that aren't what they were at the start.
They're not,
That's even
yeah.
a little bit more,
And
and it is a risk.
Yeah, and last week obviously Trump was brought back in, and it had a spike, and no doubt it'll go down again. So
Yeah.
whereas property, it'll continue to.
I think it's important to have a bit of a mixture.
Yeah.
Property is that consistent element, I think, to your overall portfolio.
Yeah, it's always good to diversify, but I think, if anything, it's the more stable investments tend to be in the property market. And yeah, I mean, we had the budget obviously a couple of weeks ago. People were sort of hanging around to see what would happen. I had a lot of, my buyers were certainly sitting on their hands for a few months really, looking what was going to happen. And yeah, I mean, there's been obviously a couple of things that have changed. Capital gains tax, stamp duty has been increased ever so slightly, but you still look at, the trends of the market and the growth that it's seen, and even if you paid an extra couple of percent stamp duty, the appreciation you'll see over probably 6 months will wipe that out straight away. So I don't think it's going to have a too detrimental effect on with the buyers' actions.
No, I've not seen it deter people at the moment. Even some of the our overseas clients as well, and obviously theirs gone up again.
Yeah.
But it didn't have the dramatic impact we thought it did when that rose to 5%.
No, it didn't. And a lot of the deals that I do are bigger scale, and when they took away the multiple dwellings relief earlier in the year, I mean that's had a massive effect on stamp duty. It's gone up hundreds of thousands on a £1 million purchase really.
How does that impact on some of the larger sort of portfolio deals that you do?
Not too much. I mean, the sellers are a little bit more realistic on their expectations, and a lot of them are, we sort of do a meet in the middle where no one's losing really. The buyer gets what they want, the seller gets what they want, and everyone's happy. So obviously, I don't think it affects the ones and twos as much, but yeah, it's one of those where everyone compromises at the end of it because they want to get a deal done.
And you can offset your stamp duty when you sell it anyway.
Yeah. Well, for now, that'll be the next thing. But yeah, I think in terms of especially what I do, a lot of the buyers they're not overly fussed about the locations where they buy, as long as obviously the return is good. Obviously, they can keep an eye on it. It's got to be within a few hours of where they're based, but I think in terms of locations, as long as the numbers stack up, we can prove the modelling. They're not too bothered, and I think that goes for individual unit buyers as well. They shouldn't be too fussed really on where they're buying, as long as the returns are good, the property's managed for them. So especially.
Well, they're not a hands-on landlord, are
No, they're not, and I think especially the student market, student accommodation, assisted living, they're completely hands-off. So it shouldn't really matter where they're located, as long as the returns are there, they look good. It shouldn't deter any buyers really.
Yeah, I think we sort of simplify and package quite a complex process of buying property, don't we? So like as Samantha said, it's hands off. So really, if you're having that conversation with a particular landlord who only has property in London, or I only have property in Essex, this is where I'm going to buy. It's proven to be a great market for me. You open their eyes up to actually there's other places that I can.
They don't realise sometimes how many moving parts there are until we actually bring it to market. To make it completely hassle-free for them, because there's a lot of people coming together to make it hassle, hands-off and as easy as possible once they've bought.
Because do you think they're aware of the yields that you can get in other like more regional towns and cities that you probably would overlook?
I think more than they used to be, but still, there's still be a lot of people that are solely, London.
Or now Manchester.
Manchester. Whereas we're looking at, you see a lot of the student stuff that we've done recently, Midlands, Huddersfield, places like that. So smaller places. The assisted living, obviously, they're here, there, and everywhere. But they don't need to be visited. They don't need to be managed. It's all taken care of for you.
And we have a lot of overseas buyers, and again, they may never visit the UK. These aren't hands-on, practical investments. These are for people who want to, earn an income from their investment, and they're trusting, us, the management companies, less companies to actually.
I think they just want to put their money in a safer place. You look at places like, like China, like Nigeria, and it's you can earn. I know for a fact you can earn higher returns in African countries because the banks pay 20% plus in interest, but they don't feel safe having their money in the country, so they'd rather spend it in the UK. Obviously, we've got the foreign exchange companies that we work with now that make the process even easier. It used to be a real pain for especially African buyers to get their money into the UK. They used to have to go and buy dollars, send the dollars to a family member in the UK. They used to then have to go through client care with the solicitor. It used to be a real hassle, but now we've got these foreign exchange companies that can, within 2 or 3 days, they can move local currency, so not dollars, naira in Nigeria, they can move it to the UK in 2 or 3 days.
And I think that's understanding now what our buyers are looking for and their attitude towards investing. It's not always, if you speak to obviously our average investor in the UK, or average demographic, it's, I want to make a stable rental income, and hopefully it goes up in appreciation. That's what we all want, right? But they have other requirements and for this investment. That's whether that's I want money out of my own country.
They like convenience.
Yeah. So I think even if we look at all, like we touched on before, all the political changes, or whether it's Brexit, or the COVID, we've seen these obviously huge impacts here in the UK. That doesn't deter our overseas investors.
No.
They still consider in a lot of our
They've seen the resilience,
and they still consider it a safe and stable economy where they want the money. And I think that's shown us how we have to adapt to a lot of our overseas our international clients, their investment goals and what they now want to achieve out of the UK market. It might not just be, I want a 2-bedroom property in Birmingham, or I want a 1-bedroom property in London. They've got a different appetite now, haven't they?
I think so, yeah. I think obviously my role in the company's changed quite a lot, and we've moved away from just selling individual properties, and we sort of knew there was always buyers out there for the let's say the bigger stuff, but it wasn't really a focus because the market was really good. And then I think I not picked up, but I worked with quite a few buyers that over the last, I've worked with some of them for 15 years now, and they've they originally started 1s, 2s, and then they upped their game, should I say, and they were starting to buy 5s and 10s, but
their confidence
their confidence grew, and they were still deals within a building where other investors were buying as well, and then that grew again. So they were then looking for full control, so they wanted freehold, and that's where my role changed within the company, and then we've gone from there, and now I've worked with previous buyers, but we've picked up a big number of newer buyers, funds, family offices, and they're all hungry to buy bigger deals, not
commercial offerings.
Commercial offerings, yeah. So we started with your typical, your PRS stock. So for freehold blocks where investors could, they buy them vacant or tenanted, and they'd just be managed by a local agent. We then sold some of the assisted living stock off market, but they were buildings of anything from 6 apartments to we've done as big as 50 units. Commercial units, so we've sold a lot of commercial stuff, whether it's vacant. We've done a few units in Media City here, and then we've had stuff with blue chip tenants, so your Tesco's, your Starbucks, companies like that. So there's a big appetite, and investors, they're realistic as well, because you're not going to buy a commercial unit with a blue chip tenant at 10% return. They're realistic, and they'll look at 5-6% because they've got a tenant that they know Tesco aren't going to go anywhere. And if it's a unit within a building of 300 apartments, you're pretty certain that they're going to be there for a long time.
And I think that really shows how the market moved on, because when I started working here almost 13 years ago, I don't think we would have contemplated selling that kind of commercial offering to anyone.
Well, you sort of left it to specialist, you know, commercial sales agent. But you know, a lot of our developers, obviously, they're building these sites and they've got the units in the bottom ready to go. Why not use the same exit that they've used for their, you know, for their apartments? It makes sense, and you know, we've got the buyers for that sort of stuff now, and even more niche stuff. You know, we've sold, you know, a film studios this year. We've agreed a deal on that. You know, I've been offered race circuits. I've been offered, you know, KPMG's head office down in London to sell. It's, you know, that part of the business has really grown. So, you know, I'm excited over the next couple of years to see where it takes us.
Very different from us selling, you know, when I started, land plots in Brazil. And,
exactly, yeah.
You know, apartments in Thailand,
yeah.
condos in the USA, which again, you know, are earning people their returns, but just such a different offering.
Yeah, I mean, it was daunting at first because obviously you get in these sites that some of them are, you know, they're 9 figures plus, and it's, you know, you think sure there's no buyers for these, and then you know you go rooting for a few weeks and you realise that there's a buyer for anything. You know, if it's priced right and the investment looks good, there'll be someone for it.
I think that's the key, isn't it? It's determining that it's not just about us selling something, it's making sure it's packaged properly.
Yeah, correct.
So that we know both the buyer and the seller are getting what they want out of the deal.
Yeah, I think so. Obviously you get a lot of people that band around off-market deals, and a lot of them are not off-market. You know, you see them with 10, 12 agents, and you know, I want to make sure that the stuff we get exclusively, you know, where the mandate on it, so no one else can cut round us, and yeah, it's worked really well. We've grown a good list of contacts over the last couple of years.
Absolutely.
So obviously I've been here for quite a while now, but you two are both, you know, part of the furniture at Knight Knox, even though I'm younger than both of you.
Dear.
So yeah, well, I mean, what would you say has you know been the biggest sort of changes over the last 10, 12 years?
I think it's how we've adapted to our changing client needs over the years. It's obviously changed a lot since I started. So, you know, historically we were one of the first companies to go out, investment companies, to go out and actually hold seminars in places like Hong Kong, South Africa, Shanghai. We've held them in a lot of places because we found that while we do talk about this being a hands-off type of investment, you know, people aren't necessarily going to come and visit an off-plan site because it is a hole in the ground. Mm-hmm. However, a lot of people like to meet with us face-to-face. They want to build that trust. And I think it also, I mean, we've been really privileged. We've visited a lot of countries.
Done a lot of travelling.
You learn a lot about each other. I
think
in that time, a lot of times there's a lot of
jet lag,
which is not pretty at times. But it does really, I think, that you get to know the different clients and their cultures and what they
attitude toward investing.
Yeah, and the difference. So Middle East, really like the face-to-face contact, like a lot of meetings. We'll do a lot more, I think, to and fro-in. You know, want to really understand the nitty-gritty and how things work, but like to spend time with you, meeting you and taking the time to get to know you. I think Asia is a very big market for us.
Yeah, I feel like historically they're quite very impulsive, I think, in terms of buying, but also extremely educated as well. There's a misconception that people who buy overseas don't really know what they're buying, etc. But it's absolute opposite. I mean, some of the places we've visited, you know, they know the markets, our competitors, what's sold where, better than
some of the questions they ask.
Yeah.
I mean, they used to say down to the unit numbers.
Oh, down to the unit numbers.
Yeah.
They know price per square foot, everything, absolutely everything. So, you know,
I think you find they've done a lot of their own research, and then I think what they want them from us when they meet us is to really sort of ask us the questions to know that their research is sound, that they will take
sort of
themselves.
Exercises.
Yeah, absolutely. And but I mean, we've had an amazing time over the years. I mean, again, you know, we've done seminars in I think Hong Kong was one of our biggest markets for a long time. And, you know, I think at one point on our first event out there, I mean, we actually had to, you know, ask people to leave at 11 o'clock at night because we were really tired and wanted to go to bed.
Same for you. I think I was still emailing and WhatsApp all through the night when we used to do those trips. At one point, I think we used to do several, I think specifically in Hong Kong, several a year.
Yeah.
And sometimes it'd just be our more seasoned investors that come back to see us.
Yeah.
Obviously, who
Say
want to
hello.
buy more, to say hello.
And bring their friends.
Bring friends. Just again, emphasising that trust element as well. It meant so much to them to really see us. But yeah, no, you're absolutely right. Sometimes it was full queues outside our doors or in the lobby. In the early.
But it's been amazing, and I think, you know, when you have worked for a company for so long, you know, I think what's good about that is that you can look back and say we had the opportunity to be exposed to so many different cultures and countries, and
Well, the experience is invaluable, isn't it? In terms of, you know, how you adapt to what they need as well, and on what they need from you.
and I think that's probably influenced the type of properties we've sold as well, because we've seen appetites in different countries, and then we've, you know, taken a project over there, launched it, because we know that there is an appetite for, say, purpose-built student accommodation or residential, and we've adapted that to the markets we've worked in over the years.
Yeah.
How do you feel like that's changed our overall single marketing director? You have been for a long time. How do you think that's changed our marketing?
I think things have evolved a lot, and I would say COVID had a big impact on that. So whereas pre-COVID, I think print material was really big. So brochures, physical copies in people's hands, people wanted to take something away, exhibitions, attending, you know, holding our own seminars and attending exhibitions was a huge focus, where people wanted that face-to-face interaction. They wanted to do a meet and greet. They wanted to physically come, maybe see a model of what was being built. COVID and post-COVID, I think that a lot of that changed. You know, the world closed up essentially in terms of
The world of Zoom.
the world of Zoom, you know, which, you know, like it or loathe it, is here to stay. You know, a lot of our marketing materials became digital.
Yeah.
I think in the last 1 to 2 years, that the whole world has seen a massive, massive change in how people interact on a daily basis. Social media, it didn't exist when I was at university, you know, before I started working. It wasn't a thing. I think Facebook had just come into existence, so I'm showing my age now. But it wasn't a
MySpace.
thing. You didn't have to, I didn't learn about it.
Yeah.
It wasn't there. Jump to now, and that is how, you know, recently I think there was a stat where everyone, you know, post 2022, they actually don't necessarily use the term I'm going to Google something anymore. They will say I'm going to search. They will use TikTok as a search engine, whereas someone of, you know, our age wouldn't even think of doing that.
No.
The first instinct is to say I will Google something. It became a noun.
It's sort of find a video more informative, I think.
Yeah, so we've changed that. I mean, the fact that we're doing this podcast, the fact that we have started producing, I would say, a lot more educational content as well. I do think if we go back to it is marketing, but it's also the demographic of our buyers, which I think, I'm not sure if we touched on it previously, but we've always, maybe because of the value of the investments and the type that they are, you know, 55 over has always been the demographic of people that would be an investor, which makes sense. You know, the amount of money that you're expected to outlay, could that come from savings, inheritance, pension fund? However, as we said before about the rental market and the change in, I suppose, expectations of where people are putting their money, we're seeing a lot more younger buyers coming into the market now, and that is having an impact on our marketing and the type of content that we're producing. It's a lot more educational because people are wanting to find out from videos how an investment works.
Before they take the plunge.
Before they take the plunge, rather than, I would say, previously people might pick up the phone and maybe have a conversation with salespeople like yourselves to really get down to the nitty-gritty of how it works, or ask for a brochure and read through it. What they want is this more type of educational content and they're digesting the information themselves, almost doing their own research, and then coming back with, I would say, really pertinent questions that they're getting to the point where they're like, right, well, I've researched it myself, I've looked at the content you've put out, I've, educated myself, I now want just that bit more.
It's almost like they come to us and say, I'm ready to buy.
Yeah.
You just need to guide me as to which is the best for
I would
me.
say so, yeah. And I think that's a big change for us. I think definitely the digital sphere is where everything's at. And even for older generations, that does move on. People do move with the times, and we do find that more and more people are in a digital world regardless of their age. So our marketing has to adapt.
It's funny you mentioned actually about our average age. You said around 55, is it currently?
And older.
And older. It has been for
quite a while, I would say, even the last 10 years, I would say, and again, because that's where people probably have, accumulated that wealth and can afford to invest.
It's no coincidence, is it?
They're slowing down a little bit, aren't they? It's like an income stream.
Yeah, but it's also the baby boomer, isn't it? Their generation, they're the richest generation really of our time. It's true, isn't it? So they're cashing in on those pensions that we all don't have access to anymore. They don't exist. So it isn't a coincidence. However, I think the influx of younger investors coming to the market now trying to educate themselves because they're really taking an interest and have to take an interest in their future and whether that's property
or
a good sign. Investments, definitely.
And I think it's because, when we talk about boomers and pensions, pension pots for someone of my parents' generation is a lot different to my pension, what my pension pot would be. And my pension pot is incredibly different to what someone in their 20s now is going to be. So
you have to rely on other investments, don't you?
You can't rely on that. That's why people are looking to where they can put their money longer term and not just rely on a state or private pension, because that's not where, their income stream is going to be in their, retirement plan. That's not where their income's going to come from in their retirement years. It's not going to be from a pension.
No.
Especially not after the budget.
So thank you everyone for listening to our end of year podcast. We've had a great 20th year. I think we've achieved a lot. We had a figure in mind that we wanted to raise for charity.
Yeah, we pretty much smashed it.
I think so, yeah. I think we're almost there.
At the expense of me and Rebecca jumping out of a plane.
Yes.
Very
from
brave.
15,000 feet.
Yeah, that's it. I feel like all the teams really got involved with all the events this year as well, haven't they?
Yeah.
I mean, what have we done?
Tough Mudder.
Yeah.
3 Peaks. Don't think I've recovered yet from that. Your feet still hurt. We've done loads.
Strictly?
Yeah, Strictly. Yeah. I'll sign you up for that singing contest next year.
I've signed you up for the fucking singer.
I won't be joining him.
Yeah.
But no, I think we've had a great 20th year. Here's to the next 20. Hopefully not just the 3 of us.
Yeah, let's see where we are in the next even 10 years, sat here chatting away.
Yeah, no, great. So happy Christmas, everyone. Thank you.
Merry Christmas.